Hey guys, welcome back. In today's video, we are talking about why the end is near, 100,000 shares bought, short sellers down for the year, and many more in this video. First, we're taking a look at this. AMC is ludicrous. 22 million shares traded in a 3-cent range. Happens daily now. We are near the end. Apes are quietly stacking thousands of shares because they know what DFV looks like. So we have already been mentioning this for a few days now. Essentially, what we've been seeing is the constant manipulation because we're seeing massive volume on AMC. Today, 26 million. Yet we're seeing a constant barcoding, despite the fact we've seen how most of these orders are buy orders, and yet we were still down 0.46%. However, we know that that's because the shorts, the market makers, are trying to push the price down to try and convince the apes to sell. But we are obviously doing the opposite, and we are stacking thousands of shares because we know what deep value is. If you want to see some examples, you can see here, added another 500 AMC synthetics to the dart pool. At this price, how can I resist? Movie going long in theaters, and so am I. And this is just from one user. If we take a look at some more, had to add another 15,000 shares at these ridiculous prices, holding over 90,000 shares now. Some apes were catching up. So we are looking at another big ape in this as well. And also from Charles V. Payne, I bought 50,000 of AMC and 50,000 of GME on the same day, and I still own them both. And this was talking in regards to, does he hold the shares he bought from 2021? And then finally, we're seeing when I bought 100,000 shares of AMC, increments of 2 to 5,000 at a time, it was a milestone. Now over 1 million shares and a strong community of over 4 million apes worldwide. There is, beyond any doubt, by far more than 20 floats sold short in AMC. 90% dartboard on a dying industry. So you can already see from these few users, the amount of capital, the amount of volume there is already. This user of AIMS owns over 1 million shares. Charles Payne is still owning the shares he bought from 2021, which is likewise for 99% of the apes from 2021 as well. We also have constant apes buying more shares. So you can see here, 15,000 shares recently and the 500 shares here. And this is what we said with the example of, firstly, no one has sold their shares, or at least 99% of the people haven't sold their shares. So the shares, the original float that was bought up by the apes, they are still being held on by us. But then furthermore, the synthetics that are being created by the short sellers are being bought up by apes still. And this is why we've said we know what DFE, we know what deep value looks like. And this is what we are seeing. And you have to realize one of the biggest reasons for why we understand that there is so much deep value. This was a screenshot from 2024, but it just shows the potential there is. AMC moved up over 44% in a day. And now we can see this happen again for AMC. And this is something that is extremely easy. This is something that if we are not suppressed, if you don't see a quadrillion amount of tokens being used, if you don't see the constant FTDs, if you're not looking at 90% dart pool for AMC, you're pretty much going to be seeing this number, you're going to be seeing this screen almost every day until AMC goes up into the 100 for true price discovery. But when it goes into the 100, it's going to start squeezing the shorts and it's going to go into the thousands. But what we talk about is, even without a squeeze, seeing a 44% move in a day is extremely doable for AMC. We've seen that in the past before. And that's precisely why shorts are worried, because a 44% move will have massive impact, have massive damages towards the short sellers, towards the market makers. And they've experienced this in the past already multiple times, is why we saw over 20 holds on AMC. And that's the biggest reasons for why they continuously spend millions of dollars every single day to try and keep AMC down either 1 cent or at its current price. Because for them, if it goes up, it will go up exponentially like what we're seeing here. And that's what they're worried about. You can see the short sellers who have claimed to be shorting AMC, who have been constantly vocal about AMC short sellers. This is from John Hampton. We covered him before. Essentially, the owner of a fund who constantly talks about AMC, constantly talks about shorting AMC, ladder attacking AMC, etc., etc. And you can see how active he is talking about AMC and the shorting of AMC. Now, he is extremely obsessed. But what he doesn't talk about is the fact that his fund is down 16.6% over the past year, with a bigger drawdown in spots. And so he's claimed that AMC shorts is one of the easiest positions he's made. He's claimed that he's made so much money from shorting and that it is just easy money, it's free money from shorting AMC, yet his funds is down 16%. And so it wouldn't surprise me, the reason why he's down so much is because of the fact he's trying to short AMC. And we know with the synthetics created, we know with the FTDs right now, that is what's eating into them. Bear in mind, we also talked about these short sellers of AMC. They're not only losing money from when AMC goes up in price, but remember, they have to spend money to create synthetics, to use these tokenizations, to borrow the shares, the short borrow fee, the short financing fee. All of these are eating into their cost. And that's why we're seeing these companies losing money. And that's why they're still extremely vocal, because they are worried about AMC. They are trying to push AMC down because they are being affected and losing money from the AMC shorts. And now you can see, who would have thought movie studios extending the theatrical window will be bad news for the biggest movie theater company in the world. So despite whatever positive news we're seeing in the industry, AMC always doesn't benefit, at least most of the times. And this is extremely weird, because how would the biggest movie theater not benefit from the positive news within the industry? Now, because of things like this, again, apes are realizing that this is perfect opportunity. And it's one of the biggest reasons for why institutions are buying as well. We've already talked about how much value there is, how much potential there is, and this is just examples of it. And if you want to look at the reason and comparison of the two companies within the industry, AMC and Cinemark, you can see here. Pursuing the reasons, analysts who cover AMC Entertainment and the financial publications which piggyback off the sentiment, they all have continued to lower AMC's price target based on this statement, which has taken precedent over dilution, which talks about, keep in mind that Cinemark has rarely faced this same criticism, that challenges such as reduced theater attendance and shortened theatrical release windows. So that's what they're talking about. Yet when AMC does mention increase in theater attendance, they go completely blind, they go completely mute, and they don't talk about these subjects whatsoever. And as of today, Cinemark has a market cap that is 6 times that of AMC. Yes, AMC has more debt, but they also have way more screens to profit from if/when box office fully returns. And so firstly, we have to realize, yes, there is still a difference between AMC and Cinemark. However, the very fact that Cinemark doesn't face the same criticism as AMC, they don't face the same hardships as AMC, that's already ridiculous as a whole. More importantly, we have to remember how, firstly, AMC is restructuring their debt, but also we talked about the premium screens that they've increased. They own the biggest screens in the world. And so when we do talk about who's going to be making the more revenue, when we do talk about who's actually going to benefit from the theater attendance, it's going to be AMC. And these are the points that media articles always leave out, because they realize if they were to talk about how AMC is going to be the biggest benefactor of the industry recovering, of the industry improving, then everyone will look at AMC as the golden investment, and they can't afford to have that. And this is why they never talk about when AMC is doing well. So they always throw these negative points, but when AMC combats these negative points and completely beats it, they go completely silent because they are afraid of what's going to happen. You have to realize this, the if/then. If the price of AMC is given a price target of 1.10 because attendance is lackluster, theatrical release windows are limited, forcing AMC to dilute shares in order to make up for the lost revenues due to the buff, then the price target of AMC should be increased because pre-sales are showing sold out theaters for several of the most highly anticipated blockbusters of 2026. Theatrical release windows have been extended, and AMC can limit the amount of dilution due to expected increased revenue due to the above. And this is what we talk about with how media articles go silent when AMC combats these. They talk about how AMC is limited by all of these negative points. But the very fact that AMC breaks out of these points and they start benefiting, and the very thing that you said was causing AMC to go low is now gone, which should in turn mean that AMCs go up, they go silent. And so this is a very good if/then, because it shows how AMC should be priced way higher than where it is right now. And on top of this, if you're so sure about AMC going down, if you're so sure that AMC is naturally going to go bankrupt, naturally going to fall in price, why are you borrowing an extreme amount of shares? 2.5 million shares already borrowed. This is on top of the millions of shares they've already previously borrowed. This is on top of the shares that AMC has diluted and given out. This is on top of the tokenizations. And so despite saying that AMC is naturally going to go bankrupt, despite the fact you're saying that AMC should be going down in price, you're still borrowing a drastic amount of shares to bring AMC down. That's the thing that needs to be talked about the most. And that's because they are stuck in a horrible bad bet. From the daily barcoding, high as hell of exchange, and bit-ass F people like Hampton, it tells the whole story. And we've already have to realize this. We already talked about, if you know what dark pool is and you see how much AMC experiences dark pool, you already know what's going on. And then you're seeing the daily barcoding, the manipulation, the high frequency trading algorithms. And then you're seeing people like Hampton who are talking negative about AMC, despite the fact that their fund is down 16.6%. And you can see how it's not organic price discovery. This is just a screenshot, screen recording of AMC's price movement. You can pretty much see the barcoding here. There isn't anything that needs to be explained apart from what's actually going on and the suppression that is obviously happening. And you can see all I want is natural price discovery. No forced or coordinated short squeeze, no manipulation, just a natural flow of order on the lit market. And this would be the only thing that apes would ask for, because when we do get natural price discovery, we are going to get a short squeeze. And even when you throw away short squeeze aside, when you just look at where AMC would be if we were to get real price discovery, and we talk about the sentiment involved and amount of volume that comes in for AMC, we can already see AMC 100x, 200x, and even more. And that's why, even without a short squeeze, a natural price discovery would already push AMC into the hundreds, if not the thousands of dollars. And I also want to show this here, which is showing the bot on AMC. And you can see these comments. I cannot post enough bad things about your leadership as a CEO. I can't say enough bad things about your leadership. I cannot say enough bad things about your leadership at AMC. I cannot say enough bad things about you, etc., etc. And these are pretty much at the same time, and they're the same things. And these are constant things that we see. And this is what we've said with how they're using media articles. They're using scripted bots on Twitter. So why would you do this for a company that you think is going to go bankrupt? These are moves you try and use to force a company to go down in price, because otherwise they wouldn't go down in price. And we're seeing this very same thing happening to AMC. You're also looking at the cost of borrowed volatility among baskets of stocks and illegally naked shorted ETFs as well. And we talked about this. These ETFs are used to short AMC, to short GME. And we're seeing this spike up as well. Big reasons for why all of this is happening. We talked about what's happening with AMC. When we take a look at the macro, firstly, private credit is having a meltdown. We are seeing devalued collaterals, which could easily see everything melt down. We're looking at $1 trillion being wiped out of the US market today. We've seen JP Morgan sued for involvement in 328 million market manipulation scheme. So let's slow down and talk about these few things first. Firstly, private credit, we've already talked about this. The private equity, the private credit, this industry has been having a lot of problems, and Wall Street has been extremely wary of what's going on. It's also played a big part to a lot of collaterals falling. So that's the first part. The second part is we're seeing the collaterals being wiped out in the stock market. One of the biggest reasons for why we focus on collateral is because of how they're used to short AMC to suppress GME. And so as we see collaterals drop, we're going to be seeing that loosening for AMC. We're going to be seeing how these short sellers are finding a hard time. But also talking about JP Morgan, talking about market manipulation, it's just to showcase what's actually going on in the market and why we're not in a fair market. Another thing, we're seeing more volatility on oil. Again, extremely volatile. If you're trading futures, obviously good luck to you, but you're seeing this volatility and you're seeing what's going on. And these volatility, whilst they're good to profit off, they're also very immune to, of course, bankrupting and liquidating many firms, and they're suffering from this liquidity. And then finally, what they're saying is that retail investors shows first signs of buyer fatigue. Now, what they are trying to say is retail investors are buying into AMC and GME, ignoring every other stock, allowing them to not exit, allowing them to not profit from these stocks, and now they have to spend even more money to suppress AMC and GME. That's what they mean by this. Now, as always, none of this financial advice, so do take our second result. Make sure to do your own due diligence and research, and I'll catch you guys next time.